Welcome back. You're watching The Money Show, and we're speaking about gold in this segment. It is, after all, the one thing that Indians love almost as much as real estate, or maybe you can argue that they love it as much as they love real estate. Now, the World Gold Council has come out with a report, the first in a series. It's called The Drivers, or rather it studies the drivers of Indian gold demand based on econometric analysis. Joined live by Somasundaram PR, a Regional Chief Executive Officer of India of the World Gold Council. Thank you so much, Mr. Somasundaram, for taking the time. I do want to understand this, and I've read through the report. It talks about the near-term triggers, it talks about the long-term triggers, and it talks about quite a few things that are developing in the Indian market. What are the key takeaways that you can tell my viewers about?
Well, as you rightly pointed out, gold is not new to India. Everybody understands gold. So there's a lot of wisdom around it. We have applied some quantitative techniques to, check whether anecdotal evidence and, common wisdom match the reality. That's the purpose. And what we have done here is to study the quantitative factors which drive demand, and look at also some of the qualitative factors. And the quantitative factors, we looked at long-term and short-term. We all know we love gold because it is a hedge against inflation. So we applied these factors. We did the analysis for about 30 years data, and we found that income has a very strong influence on demand. So as income grows, demand grows. Other factors actually wane in the long term. Whereas when you say income grows by 1% in the long term, gold demand goes up 0.9%. Whereas when price goes up 1% in the long term, demand comes down by 0.4%. So that tells you that how much income affects demand. Whereas in the short run, when there is a 1% increase in price, you see a drop of 2.6% in demand. Because in the short run, price really affects your sentiment, etc. Similarly, a 1% improvement in rainfall over the long-term average increases demand by 0.2%. And so we studied these quantitative factors, and the primary drivers are this. Income has a very strong influence on demand. Taxes, again, have a stronger influence on bars and points than on jewelry. And as we said, so looking at these, how does the Indian demand look for the next few years? Obviously, given the other factors like the population, young population, the GDP growth that we're going to see, it looks very positive on one side. But there are also other factors like improving financial literacy, increased urbanization. All these things could also act as headwinds as we go along. So that's what this report talks about. This is, as you said, a series of things that we're going to bring on the Indian market report. It's part of the India Gold Market Report that we are refreshing after 5 years.
Some of these things that I read in the report, like you said, they quantify things that I think are common wisdom, but it's interesting to talk about, right? Specifically, India, you've mentioned, has a very strong demographic dividend, and you have quite a few people that are going to join the workforce. The report says that the Indian working age population is seen rising by an average 70 lakh in the next 20 years, and that bodes well, certainly, for the gold demand, right? So talk to us about the implications of that. India is already the second largest consumer of gold in the world. Is there any possibility of that increasing substantially in those 20 years?
Well, when you look at such a long term, we also have to look at the changes in attitudes. India and Indians, we love gold because we have been one of the largest trading nations. Gold was a currency, so it's very natural that it's in our psyche that we think of gold still as money. Which is one of the reasons why across all households in every income category, we love gold. And that's not going to go away. Having said that, we also have to see what's happening in the modern economies. As the economy grows, certainly incomes will grow. Many more households, which are today probably not in the savings threshold, will become middle class. They will start saving. And the first saving asset they will look for is gold. So that's very, very positive. On the other hand, when you look at the growth in other asset classes. Let's take equities, for instance. The demat accounts in the last few years, thanks to the work done by various agencies, has grown from 1.7 crores to 5 crores. And you look at the other kinds of spendings that youngsters do. It's not like in their parents' days where gold was the only ultimate luxury. Today, luxury is redefined. They are looking at travel experience. They're looking at cars, houses. So these are also going to cut into the wallet. Household savings have come down. While it has gone up to 34.6%, it has, in recent times, it has come down below 30%. So to that extent, therefore, you will save less and you will spend more on other stuff. So these are going to act as headwinds. So it's not always one way. It is saying that, yes, gold is definitely embedded in our culture. It's got a strong future as it looks like, given the triggers that we have studied. But there are also other factors in the horizon. We've got to take care of this. Industry has to do a lot more in terms of transparency, in terms of innovation. That's what this report deals with. So it's not one way. It is positive, but it is not like a field where you can play the game your way. You have to take a lot of the consumer interests and consumer preferences into account.
One of the factors that you mentioned just now, in fact, what I have highlighted also, what was written in the report, is that financial inclusion, financial literacy acts as a headwind for the gold market. And I'm assuming you're talking about that, and also it was mentioned in the report that you're talking about it in terms of the financialization of assets or financialization of savings, more bank accounts opening up. But the other factor that I want to understand is the preference for certain types of gold purchase. And you've split this between urban and rural. One would also assume that ties into the whole financial education and financial literacy bit. Do you see the split changing, or do you see the ratio changing going forward?
Well, at the moment, we always say that rural economy drives demand, and it applies to many things in India because you have large population in the rural areas. But what happens here is, and rural demand was high, partly also because there was no financial inclusion. Let's put it like that. Gold was a currency. There were not many bank accounts. But with the digital economy, this is all changing. Now, you may not see the impact of it immediately, but clearly, if you look at a 20-year horizon, you're going to see a massive change there. So will gold then, what role will it play, when financial inclusion increases? Now, unless gold enters the digital ecosystem, you are going to be left out. That is why you see a lot of initiatives being taken on the digital gold side. Not just selling gold through the digital means. I'm saying even the jewelers now are becoming very savvy about the digital engagement with consumers. So the question here is, 20 years, you can't say that the society will remain the same, other asset classes will remain the same. What are we going to do to make the legacy strength play out in the next 20 years? Now, that is obviously something which you will see quite a lot of change coming through, and it will be very difficult to predict that. Having said that, gold will certainly be part of our investments all the time. We are one of the largest holders of gold. As a nation, we hold more than 25,000 tons of gold. So it is in our interest to make sure that gold always remains a monetary asset. So that's not going to go away. But will it be the same? Will 60% of the demand come from weddings in the future? It's very difficult to say. But with aspects like financialization of gold, with the exchanges coming in, with purity no longer being an issue after mandatory hallmarking, things will change differently. The way we buy gold, the reason we buy gold, everything could change.
Fair point. I want to actually tie some of the aspects that you've pointed out as short-term triggers into what we're witnessing right now, considering that it is the busiest period in India for gold purchasing. I just want to understand, you've seen gold prices come off all-time highs, and if I'm not mistaken, they're hovering around 48,000 rupees per 10 grams at this juncture. What are the implications of that? Have you seen in your channel checks that there's been a sharp increase, and also the return to physical stores? I know that you have a report releasing next week, But what are the channel checks that you've done suggesting in terms of gold demand this festive season?
Well, as this report itself says, in the short run, price has overwhelming influence on demand. 1% increase, a decrease in price for that matter, leads to a 1.2% jump in demand. That's something which comes out as a short-term factor. Long-term, 1% increase in price does not lead to an equivalent drop. It just translates into 0.4% drop. So in the long term, the price wanes. In fact, people want price to go up. That's why they buy gold. In the short run, however, when the price goes up or when it comes down, you always look for a bargain deal there. So currently, what we are facing is that the prices have softened. It touched 55,000 ranges. Now it has come down to 48,000 ranges, which is good for the consumers. That is why you see more of jewelry purchases coming back. It's also coupled with the fact that, weddings are coming back and social occasions are coming back. Therefore, you see a lot of consumer buying now actually coming back in the current thing. But what happens then to demand for investment gold, which is the bars and coins? You'll always find when prices soften, people with an explicit investment intent, those who buy bars and coins, will always stay in the they will just wait and watch to see how these prices behave. Will it come down further? That's exactly what is happening. In any case, bars and coins demand, because of various measures taken by the government, is always a very, very small portion of the overall gold demand in India. It's about 15 to 20%. The best year has been 20%. So, but bars and coins demand is affected by a drop in price. Jewelry demand actually comes back. Two reasons: lockdown for 20 months, people haven't had much purchases, savings have gone up. So that is one reason. Other reason is generally that people find now 50,000 an acceptable price range, and therefore they are back into the market.
All right, Mr. Somasundaram, looking forward to seeing the report and the key trends that you discover in the report. I think that comes out next week. Pleasure as always speaking with you. Thank you so much for taking the time.
Thank you.